are a lot of determiners to the growth of a stock, more like signs that experienced investors look out for before investing in a stock. One of these determiners is YTD. Nobody wants to invest in a business or company or buy stocks that are most likely to plummet. Hence, investors would take a look at their YTD records in order to come to a conclusion as to their liquidity rate and the prospects of a good return on investment. YTD expands as year to date, and it is the analysis of the performance of a company or a product from the beginning of a fiscal year to the end. Also known as YTD returns, YTD gain is the amount of profit a company has made from the beginning of a fiscal year to the end. This is a very important part of an investor's research scheme before investing. With the volatility of the market now, you don't want to take the risk of investing in a company with a very low YTD gain or none at all. This is why we have brought to you 5 companies with 100% YTD gains you can invest with. Make sure to watch till the end to learn about YTD gains. Don't hesitate to like this video and hit the subscribe button as well. 5. Nvidia. Beginning our list is the tech-based company known as Nvidia. Founded on the 5th of April 1993, this company has become one of the mainstream companies in tech cycles, especially in the gaming world. The company was founded by a Taiwanese American, Jensen Huang, and is a hub for a good investment. As is public knowledge, one of the most fruitful places to invest in is the tech and games industry. The YTD returns of this company speak for itself, absolutely 100%. Nvidia has climbed this year with chip prices at an all-time high demand and supply chain issues. The rise of crypto mining, many of which require high-powered chips made by the firm, has also helped push the stock higher. Since analysts predict that chip prices will remain high well into 2022, and as crypto stock rally again after a second quarter slowdown, the stock still has room to climb higher. The company is also looking to expand by marketing special chips aimed at cloud companies and data centers. The stock price for Nvidia is $297.29 per unit, but with a return that is guaranteed. For your calculations on potential investments, the YTD gain is recorded at over 126.7%. Figures don't lie, and this is a good way to go. 4. Ford. Talking about one of the biggest and most popular automobile brands in America, Ford sits comfortably at our number 4 spot. Ford Motor Company was founded by Henry Ford. The renowned car company was incorporated in 1903. Ford Motors is a global brand, and it has its products almost everywhere in the world. As it was previously stated, Ford is one of the most notable car brands in America and the world. It is one of the only brands produced in America, aside from Chevrolets. Ford is on the list of New York Stock Exchange. The company is controlled by the Ford family. Although they have minority owners, they have majority power. Ford Motor Company stock has posted incredible gains this year as the company invests heavily in electric vehicles. New EVs, including the flagship F-150 electric truck, one of the most hyped launches of the year, have renewed interest in the automaker as a serious EV player. The company is also gaining a lot of traction among retail investors on internet forums like Reddit and Robinhood. Stocks in Ford Motors are priced at $19.29 with a whopping 126.41% of the year to date. This proves the liquidity rate of the company and makes it a good place to invest your money. 3. Devon. On our number 3 spot is one of the frontline companies in the energy sector, Devon Energy. Founded in 1971 by John Nicholas and his son J. Larry Nicholas, this company has created a name for itself as one of the most reliable companies to invest in because of the constant increase in profit. Devon Energy went public in 1988 via an initial public offering. Devon Energy is one of the energy stocks that have benefited massively from the recent increase in oil prices. The company, which has been in gradual recovery mode after the lows of 2020, was given a boost after it hiked the fixed plus variable dividend by 71% and beat market predictions on earnings for the third quarter. Analysts have forecast that oil firms will outperform the benchmark S&P 500 in the coming months. The stock price for this company is $43.58, and it boasts 170.18% of the year to date. This means that the company has a very high propensity of making constant profits, which equals constant cash out in returns. 2. Macy's. Looking for a company with a constant rate in dividend? Then you should consider investing in Macy's. The company was founded in 1858 by Rowland Hussey Macy. This company owns a chain of retail stores that sell various items in almost every field. In 1994, the company became part of the Cincinnati-based Federated Department Stores. Through its membership, Macy's affiliated with Bloomingdale's department store chain. The store boasts of being the largest department store company by retail sales in 2007. Analysts cautioned against reports of the company separating the e-commerce business from the parent firm, echoing sentiments made by Morgan Stanley earlier that the spin-off did not make sense since e-commerce would carry over $11 billion in revenue as a separate entity, depreciating the share values of the stock. Macy's stock has rallied since early October after Jana Partners LLC, an event-driven investment management firm, confirmed that it had bought a stake in the firm. The stock of this company is priced at $31.34 with the year-to-date gains of 179.3%. This means that with the affiliation with Jana Partners, things are definitely going to look up for the company, and investing in that company would be a wise move for any investor. 1. Avis Budget Group. Topping our list is a master umbrella company, Avis Budget Group, Inc. This company subsumed a plethora of companies. Some of these companies include Avis Car Rental, Budget Truck Rental, and Zipcar. The companies just mentioned are the global brands, which means that it still has a local brand. Some of these local brands are Payless Car Rental, Apex Car Rental, Marjorie Group, etc. The return on investment in this company is an alarming sum, with a year-to-date that is really viable and reliable. The short interest on this stock is close to 30%. On November 2nd, the shares soared 99% in a day of trading that saw 25 million shares of the firm swap hands. The company reported earnings for the third quarter a day earlier, beating market estimates on earnings per share and revenue by $4.06 and $22 million. JP Morgan's and Deutsche Banks have both downgraded Avis stock recently. Morgan has an underweight rating with a price target of $225, while Deutsche Bank has a sell rating with a price of $210. To acquire stock in this company would cost $297.46, while the year-to-date is a whopping 739.33%. This places the company in a very favorable position for investors. That is all we can take on today's video. Let us know what you think about these companies and their year-to-date gains. Would you want to invest in them? Let us know in the comments section below. Like this video, subscribe, share, and we will see you in the next video.